Welcome back to US Eagles Find Your Balance podcast. Let's start with a quick mental exercise. Picture this. You're driving to work tomorrow, you hit a pothole, and suddenly your car starts making a noise that definitely wasn't there before. You pull over, call the mechanic, and they tell you it'll be about $1,000 to fix. Now pause. Do you have a plan for that? If your answer is not really, you're definitely not alone. In fact, 42% of Americans don't have any emergency fund at all. That means nearly half the country couldn't cover an unexpected $1,000 expense without borrowing, stressing, or scrambling. That's exactly why today's episode is so important. We're talking about emergency funds, your financial safety net. And this isn't about perfection or saving thousands overnight. It's about building confidence, reducing stress, and giving yourself options when life throws you a curveball. So let's start with the big question. Why does an emergency fund matter so much? First, it dramatically reduces stress. When something unexpected happens, and it will, having money set aside means you're not panicking, you're not scrambling, and you're not reaching for a credit card out of desperation. You can breathe, you can think clearly, you can handle the situation without it derailing everything else in your life. Second, an emergency fund helps you avoid a debt spiral. You know how it goes. One unexpected bill goes on a credit card, then another, then interest starts piling up. Suddenly, you're paying more in interest than the original emergency cost was. It's a cycle that's incredibly hard to break once it starts. Third, an emergency fund gives you flexibility, real flexibility, during life's biggest disruptions. Job loss, medical emergencies, a family crisis, these moments are stressful enough on their own, and having a financial cushion gives you time and space to make thoughtful decisions instead of rushed ones. And let's bust a myth while we're here. I'll just use my credit card. We hear this all the time. And sure, credit cards can be a tool, but they're not a plan. They're not sustainable and they're not a safety net. They're borrowed money with a price tag attached. An emergency fund is your money, your safety, and your peace of mind. So now that we know why emergency funds matter, let's talk about the next big question. How much should you save? You've probably heard the classic advice, save 3 to 6 months of living expenses. And yes, that's a great long-term goal. But if that number feels overwhelming, take a breath. You don't have to get there overnight. Start with something simple, $500 or $1,000. That's it. That amount alone can cover most common emergencies, car repairs, medical copays, home fixes, unexpected travel. And once you hit that first milestone, you can build from there. Your ideal emergency fund depends on your life. If you have kids, you may want a little more cushion. If your income fluctuates, maybe you're self-employed or work seasonally, you might aim for the higher end of that 3 to 6 month range. If you have a very stable job and low expenses, you might feel comfortable with less. The key is personalization, not perfection. Now, let's talk about how to actually save this money, because saying save more is easy. Doing it is the real challenge. Here are a few creative ways to get started. You can pick up a small side hustle, something you enjoy or can do in your own schedule. Use cash back apps or reward programs and funnel that money straight into your emergency fund. Sell items you don't use anymore. You'd be surprised how quickly that adds up. Automate your savings. Even $10 or $20 a week makes a difference over time. And where should you keep your emergency fund? Ideally, in a savings account. You want it separate from your everyday spending, but still easy to access when you need it. Remember, small steps add up. Consistency beats intensity every time. Here are a few questions worth considering as you think about starting or growing your emergency fund. First question, what motivates you to start an emergency fund? For many people, it's a moment when something went wrong and they weren't prepared. Maybe it was a medical bill, maybe a job loss, maybe a car repair. Think about what motivates you. That motivation becomes your anchor when saving feels slow or frustrating. Next, how do you decide on your savings goal? Start with your basic monthly expenses, rent or mortgage, utilities, grocery, transportation. Multiply all of that by 3. That's your long-term target. But again, don't let that number intimidate you. Your first goal is simply your first milestone. What's the hardest part about maintaining an emergency fund? For most people, it's avoiding the temptation to dip into it for non-emergencies. A sale at your favorite store is not an emergency. A vacation is not an emergency. A new toy is not an emergency. One trick is to name your account something like do not touch or emergency only. It sounds silly, but it works. And what about people living paycheck to paycheck? This is where micro savings matter. Even $5 a week is progress. The goal isn't the amount, it's the habit. Once the habit is there, the amount can grow when your situation improves. Your emergency fund is a long-term relationship. It grows with you, changes with you, and supports you when you need it most. To close things out, let's talk about what you can do next. Building an emergency fund isn't about perfection. It's about progress. Small, consistent steps create real financial stability over time. Even setting aside $20 a week can make a meaningful difference. Your future self will thank you when life throws those unexpected curveballs. And don't forget, you can use the tools in our digital banking platform to set savings goals, automate transfers, and track your progress. It's all right at your fingertips. We'd love to hear how you're starting your emergency fund journey. Share your tips or questions with us on social and join us next time on the Find Your Balance podcast for more ways to take control of your financial future. Until then, stay prepared and stay confident.